Today we're continuing our coverage of the ongoing train wreck that is Rivian. In our previous video, we talked about how the company is burning cash at an unsustainable rate. Despite the cars selling for over $80,000 on average, they still manage to lose about $30,000 for every car they sell. Since then, the situation has gotten much worse. In the fourth quarter, their deliveries fell by 10%, and their gross loss per car surged to $43,000. To get a sense of just how extreme these numbers are, you could buy a Tesla Model 3 for less than the amount of money that Rivian loses on every car they sell. What makes the losses even more shocking is the high prices of the vehicles. In the fourth quarter, the average selling price was $94,000. This means it costs Rivian a shocking $137,000 to make each vehicle. Not only is Rivian losing a huge amount of money for each car they sell, but the prices are so high that now consumers don't want to buy them. With the R1 cars having been a financial disaster, Rivian is now turning its attention to their new model, the R2. Scheduled to be released in 2026, the R2 will have a starting price of $45,000, less than half the average selling price of the current cars. But if Rivian can't make a profit selling $90,000 cars, how could they make any money on a $45,000 car? In this video, we'll revisit the company's desperate financial situation and see whether or not the R2 can save Rivian. Rivian cars are expensive. In 2023, the R1T pickup truck started at $79,000, and the R1S SUV started at $84,000. Because Rivian does not have a dealership network, you also need to pay an $1,800 fee to have it shipped to your house. With the rise of interest rates over the past couple years, they became even less affordable as people finance their cars. If we look at Rivian's production and delivery numbers, we can see that in almost every quarter, production has outpaced deliveries. This has resulted in a massive amount of unsold inventory piling up in their parking lots. In the fourth quarter of 2023, unsold inventory surged to 11,200. Rivian CEO RJ Scaringe claimed that this was mostly attributed to the delivery vans they sell to Amazon. Because Amazon is busy during the holiday season, they don't accept delivery of new vans. A lot of the inventory buildup consists of these vans. Logically, this inventory should be quickly delivered to Amazon after the holiday season is over. Rivian provided guidance for the first quarter of 2024. They said they expect to produce 13,500 vehicles and deliver about 12,200. Thus, their unsold inventory will actually rise by more than 1,000. So how is this possible? They should be able to start delivering their large stockpile of Amazon vans, but according to their own guidance, their inventory will continue to increase. This indicates that there is a massive collapse in demand for the R1 vehicles. After they released the earnings report, CEO RJ Scaringe went on CNBC to explain what's going on.
Thank you, Andrew. Let's bring in RJ Scaringe. RJ, it was a rough report for you guys. Let's be blunt. Plus, you announced 10% of your salaried workforce is going to be laid off as you guys are cutting your costs. I'm curious, in a general sense, how much has the EV market slowed down in the last 3 months?
Yeah, I mean, we've seen historically high interest rates, and we've, along with a lot of the geopolitical uncertainty, particularly for higher-priced products, you know, in the premium segment, we're seeing the effect of interest rates, the effect of uncertainty, really impact how people are thinking about purchase decisions, and it led us to accelerating the launch of our standard pack to make sure that we have our full portfolio of products available.
So when you look at where the market is right now, your guidance for building 57,000 vehicles this year is well below what the street was expecting at 81,000. Where's the disconnect? Did the market, I mean, we've been talking about the market slowing down. Why did analysts miss it by such a wide margin?
And so as we look at 2024, we have a few things playing out. One is we're making a number of changes to the way we operate our plant, as well as our material costs, our bill of materials. And we'll be shutting down the plant for several weeks in the second quarter to make these changes. So that's an interruption to production. And then we're being very realistic just around the overall number of vehicles being purchased at these price points, in the price range of over $70,000.
He blames the high interest rates and geopolitical uncertainty for their slowdown in sales. It's unclear what geopolitical uncertainty he's referring to, as Rivian only sells cars in the US and Canada. Basically, Rivian's cars are too expensive, and very few people can afford them. To address this problem, they recently released a new option to make the car more affordable. Previously, Rivian only offered the large battery pack, which has a range of about 352 miles and costs $79,000 for the R1T and $84,000 for the R1S. This was the minimum price you could buy the car for. There are other options which can bring up the price significantly. In the fourth quarter of 2023, they launched the Max Battery Pack, which has an extra 50 miles of range and costs $10,000 more. In Q1 of 2024, they released the Standard and Standard Plus battery packs. The Standard battery pack has 270 miles of range, and the two cars start for $70,000 and $75,000. There's the Standard Plus, which has a little bit greater range for an extra $3,000. According to reporting from the blog Rivian Tracker, Standard and Standard Plus are the same battery pack. The Standard package has its range artificially limited by software. Rivian Tracker claims to have received this information directly from Rivian. Thus, the Standard battery pack isn't that much smaller than the large battery pack, as its range is only 10% smaller. Yet the price is $9,000 less. With this much cheaper price, presumably they'd be able to sell more vehicles, but this raises even more questions around profitability. Rivian claims they will achieve a modest gross profit by the fourth quarter of 2024. They will shut down their factory for multiple weeks in the second quarter to rework the production line and make it more efficient. They also claim to be renegotiating some of their contracts with suppliers at lower prices. In their most recent shareholder letter, they provided this chart, which shows their path to gross profit break-even. The chart is in extremely low resolution. I'm not sure why this is the case. You don't need a PhD in graphic design to put a high-resolution image onto a PDF. But this is what we have to deal with. In the fourth quarter of 2023, they had a $43,000 gross loss per vehicle sold. They claim they'll get a $22,000 benefit from reducing materials costs and changing the vehicle design. They'll get another $15,000 benefit from fixed cost absorption by increasing their production line rate by 30%. And finally, they'll generate non-vehicle revenue equal to $6,000 per vehicle sold. This non-vehicle revenue will be things like aftermarket service, accessories, car refinancing, etc. There are a few problems with this chart. Firstly, to achieve fixed cost absorption, you need to increase production. But given how much trouble they're having trying to sell their existing vehicles, it's unclear if there will be enough buyers. Secondly, they add non-vehicle revenue to their gross profit, but for some reason they don't include the cost of goods sold for the non-vehicle revenue. This non-vehicle revenue will include aftermarket service and accessories, which clearly have significant costs. Finally, this chart assumes the average selling price of the vehicle is the same. This is clearly absurd, as they just released a Standard battery pack which is $9,000 cheaper. And RJ Scaringe himself has said the cheaper Standard battery pack will be a major driver of sales. So the average selling price in Q4 of 2024 will almost certainly be significantly lower than Q4 of 2023. In the conference call, one of the analysts asked this exact question. He said, quote, "The price point is probably like $9,000 below the large pack, but the battery pack is not that much smaller, like 14 kilowatt hours smaller. So it feels like it's a large price cut without that much of a cut to the bill of material. And so I'm curious, does it help you with volume scale in terms of getting to that break-even gross margin? Where does it fit into the equation?" Unquote. RJ Scaringe responded with a word salad that failed to substantively answer the question. Unsatisfied, the analyst asked again, this time more directly. He said, quote, "If I'm looking at your gross margin walk towards break-even in the fourth quarter, the only piece about pricing there is this adjacent revenue, and it's a positive one. Is there any downside risk from pricing on existing vehicles?" Unquote. This time, Rivian's CFO responds. She says, quote, "While you see higher average selling price in Q4 of 2023 driven by a higher concentration of max packs that were available in that period, you'll see some fluctuations throughout the course of the year. But by the time we get to Q4 of 2024, we will have that full suite of offerings as a whole. That allows us to drive more equal levels of average selling price on the R1 portfolio as a whole, which is embedded within that Q4 2024 bridge." Unquote. If you thought that response was confusing, it's because it is. In fact, it's not only confusing, it's nonsensical. If we look at Rivian's revenue per delivery, we can see that it surged in the fourth quarter of 2024 to $94,000. This is the highest value they've reported in their history. There are two main reasons for this. Firstly, they started delivering the Max battery packs to consumers in this quarter. The Max pack costs $10,000 more than the large pack. Secondly, they delivered far fewer Amazon delivery vans, which have a lower price than the R1 vehicles. Thus, their revenue per vehicle was unusually high. Revenue per vehicle will almost certainly decrease throughout 2024. The Max pack has received underwhelming reviews. In late December, the YouTuber Out of Spec Reviews test drove two Rivian cars that were substantially identical, except one had the Max battery pack and the other had the large battery pack. Based on its calculations, the Max Pack only delivered 22 miles of additional range, far lower than the advertised 50-mile increase. Given its high cost, many commentators say the Max Pack is a ripoff. Given the bad press, sales of the Max Pack will likely decline. In the fourth quarter of 2023, the Large Pack and Max Packs were available. Now, the Standard and Standard Plus packs are also available, which sell for a far lower price. So obviously, the average selling price will decrease. Let's go back again to what Rivian's CFO said. By the time we get to Q4 of 2024, we'll have that full suite of offerings. The full suite of offerings presumably refers to the 4 battery pack options. This is embedded within the Q4 2024 bridge. The problem is, this simply isn't true. Nowhere in the chart does it show any decrease in average selling price. Also, the numbers are suspiciously round, adding up to exactly 0 gross profit. This makes me doubt that they are the result of rigorous modeling. They may have had some intern play around with the numbers on Excel until they came up with a chart that looks good. In my opinion, Rivian senior management now have 0 credibility. Their projections don't make any sense, and their explanations on the conference call were nonsensical. In March of 2024, Rivian unveiled its R2 vehicle, which will begin deliveries in 2026 at a starting price of $45,000. The car looks similar to the R1S, but is about 15% smaller. This is $30,000 less than the starting price for the R1S, and Rivian is already losing huge amounts of money for every R1 vehicle they sell. They're going to get rid of a lot of features, such as the 6-inch adjustable suspension, as well as some of the gimmicks like the Bluetooth speaker. But it's still hard to see how they can bring the cost down to $45,000, especially since they say they're using a lot of the same suppliers for both cars. If we look at Rivian's cost of goods sold per vehicle delivered, the lowest it ever got to was $116,000 in the third quarter of 2023. It then increased to $137,000 in the fourth quarter. To be fair, the actual cost is slightly lower because they had to take write-downs on their unsold inventory. This is included in COGS. On the other hand, the average COGS per delivery is also dragged down by the Amazon delivery vans, which are cheaper to produce. All things considered, the cost of building an R1T and R1S is well over $100,000. It's extremely difficult for me to believe that they can build the R2, which is only 15% smaller, for less than half of this cost. Alright guys, that wraps it up for this video. What do you think about the R2? Do you think Rivian will be able to manufacture it profitably? Let us know in the comments section below. As always, thank you so much for watching and we'll see you in the next one. Wall Street Millennial, signing out.